Hey gang, welcome to another one of these SPAC investor presentation reviews. Today we're talking Grab, one of the biggest SPAC deals ever. In fact, it might be the biggest SPAC deal ever. It was just announced today after a week or two of rumors that sent the stock up to the $14 range, which is, whoops, let's go back over here, which is a good deal above NAV. It's actually been one that's been priced pretty aggressively for a while now. I think people were expecting a lot out of this deal from management, and they seem to have delivered. The Southeast Asia market is a big one. A lot of enticing investments there. Ticker symbol SE is a good representation of that. They've been on a tear lately. One of my favorite stocks, honestly, and a stock that I own. So it'll be interesting to see how Grab stacks up against that and what their projections look like. Again, I'm not a qualified financial advisor. Please make sure to talk to a qualified financial advisor before you make any decisions about any investments. I'm just doing this for fun. So let's take a look at Grab, one of the biggest ride-hailing food delivery companies in that area. What are they up to? So we've got speakers, we've got the transaction overview. Pipe size of $4 billion, pretty huge pipe size at a price of $10. You've got a $30.3 billion enterprise value. What's that one say? So it's a pre-money enterprise value. Okay, so I don't know why they have it there. And a post-money $39.5 billion equity. So that's a market cap. Your pre-money enterprise value is about $9 billion short of that. So it looks like they're getting about $4.5 billion in cash. So your post-money enterprise value should be about $35 billion-ish. $500 million of trust proceeds from AGC, and the money is used for growth capital. I kind of wish they showed this a bit better. It's a bit confusing. It doesn't really show you where the money's going, but it seems like they're getting a decent chunk of change here, and they're targeting a closing of 2021. So you've got Altimeter, right? Good company. I mean, I think that's why the SPAC was 20% above NAV for a while. People were expecting a lot out of this, and they're getting it. This is kind of similar to BTWN, where people were kind of thinking that, hey, these guys are going to get Tokopedia or they're going to get Gojek. Gojek is one of the main competitors of Grab in Southeast Asia in the ride-hailing space. I think Gojek is actually a bigger one. And, that Tokopedia-Gojek merger kind of went nowhere. It ended up that I think BTWN is potentially taking Traveloka public, which is another flight booking app that exists in Southeast Asia. So there's a lot of deals being made around Southeast Asia. When the Tokopedia Gojek thing kind of went into discussions, they were talking about a deal worth as much as $40 billion for that company. So it's interesting to see that Grab is basically valued about $40 billion on its own. It'll be interesting to see their projections whenever they come out and how they line up against Grab here, because they're kind of in a similar business. The interesting thing here is there are not going to be a lot of good comparables here. Grab is a business on its own in relation to other companies that are publicly traded in the Southeast Asia space. And Southeast Asia is one of the more enticing growth prospects in the emerging markets. Less regulations than China, less government interference than China, but you're also seeing, not in 2020, but between 2019 and 2021 projections, you're talking about 6 to 7% growth in some of these markets, which is quite a bit better than some of the markets that are outside of the emerging market space. So Altimeter here, the Grab way. You're driving Southeast Asia forward by creating economic empowerment for everyone. Very cool. Heart, hunger, honor, humility. Nice. Journey so far, you've got key milestones. Company started in 2012 with Grab Taxi in Malaysia, expanded to Singapore's, Philippines, Thailand. 2014, they launched more mobility services, Grab Car, Grab Bike. Indonesia and Vietnam, it was the expansion route there. You've got Grab Express, which is food delivery. You've got Grab Share, which is another mobility release in 2016. 2017, they went with Grab Pay. So you're talking about an expansion into the financial space there, which is an interesting thing to see. These Asian companies seem to be jack of all trades type deals. You've got whether it's in China like Tencent, Alibaba, whether it's Tokopedia with Gojek kind of trying to create these massive companies and probably expanding into more areas. You've got Grab Pay here. You've got Grab Ads, more of an enterprise solution. Grab Defense, don't know what that is, but you're talking about an expansion of the financial space with Grab Finance, Grab Insure, Grab Invest, then Grab Kitchen, Grab Mart, probably an online store type deal or delivery from online stores. So it's an interesting business model, one that's certainly expanding. The GMV is obviously growing quite a bit, 1 billion, 5 billion, 10 billion, with 1 billion plus in adjusted net revenue by 2019. A lot of growth here. I'm familiar with Grab. If you ever watch any travel videos around Southeast Asia, a lot of people use Grab as a service. I think the revenue they're getting is probably a lot lower than like revenue that companies like Uber are getting in more developed countries, because this is still an emerging market. But it also shows that there's a lot of potential for growth here, not only in terms of revenue growth by raising prices, but also in letting more people join the app and integrate it into their consumers' lives. So they're kind of showing that here. I think this is the overall appeal that some of these all-in apps have, is that you could do everything on an app. And once you're kind of tied to an ecosystem, and if they can get you in through their financial, you're using, Grab Pay, you're investing through Grab, you're getting food delivered through Grab, you're hailing rides through Grab, it's kind of sticky. I don't want to change to another app if I can do all of this stuff in one app. And I think they're going to expand on this. They're talking about bill payment, they're talking about online shopping, they're talking about booking hotels. So I think all of these companies are going to become a jack of all trades, and the companies that don't have that are going to fall behind. I think that's why you're seeing companies like Gojek try to merge with Tokopedia, because Gojek is more of a car hailing app, whereas Tokopedia provides the e-commerce side, probably some sort of financial aspect as well, paying online type of deal. So they claim they're the number one super app in Asia. Probably true. A lot of different services all over the place. You've got mobility, you've got express e-commerce, essentially with parcel deliveries. You've got deliveries of home-cooked meals, dine-in restaurants. Is Mart a store? You've got digital advertising, so they can sell advertisements, kind of like Amazon ads, which is becoming a bigger part of Amazon. Hey, you're making money by advertising to people that are using your app, and that's great from a business perspective, maybe not so great from a usability perspective. Then you've got your financial services. You can buy insurance, you can invest now with Fidelity, BlackRock, you can get loans, remittance, send money to other countries, receive money. It's like a combination of, Uber, PayPal, some sort of investing service like SoFi or whatever, and Uber Eats, whatever, and they've got other stuff built in here. Can you book hotels? Can you book doctor's appointments? Is this a future teledoc opportunity type deal where you can have doctor visits virtually through this app? Is this something you can go to every day and do all of your things? Can they build some sort of social network within this, right? You look at what Tencent's doing with some of their stuff, what Alibaba is doing with some of their stuff. Everybody checks into WeChat every day. It's a valuable app in China. Can Grab become something like that? That's the kind of thing you're thinking about if you're an investor in a company that's already valued at 40 billion. How can it take that next step and become a 100+ billion company? And a lot of that just deals with what's shown on this screen. It's becoming that super app that users use for more than one thing. They're not just booking rides, they're doing a lot of other stuff through your app, and you're making more and more money for each user when they do that. So you've got 12.5 billion in GMV in 2020, 1.6 billion in adjusted net revenue. So 2020 revenue is 1.6 billion. So that's a pretty high valuation on a revenue over price over sales. Rather, you've got 1.9 billion transactions completed. They're number one in deliveries, mobility, and financial services by GMV. Online food delivery category position. They're in 400 cities in 8 countries. Ton of transacting users, 25 million plus. I think when I read about Gojek, they had more than 30 million users as of like 2019. So I think Gojek is actually a bigger player in the Southeast Asia space. Probably depends on the country as well. Gojek is, I believe, an Indonesian company. That's where they started. So they were definitely a bigger player there. So there's competition in this space, but I think it's mainly Grab and and Gojek that are here. It'll be interesting to see what happens if and when Gojek merges with Tokopedia, what kind of investments they can make. Potentially, another entrant into the space could be there. If these guys are planning to expand into online stores, C Industries is already there. Like I talked about, SEA Limited is already in that space. Could they expand into other areas? They already have a lot of good businesses that they're running, and they're taking those businesses and expanding them. The thing I like about C is that they have a cash cow business, which is their video gaming business. If you've ever heard of Free Fire, that's what drives all of the investments they make, and they have really grown their revenue at a rapid pace because of that. They have a free cash flow business, and instead of taking that money as profit, they just throw it into other business areas. They have a lot of investment capital that they can make internally, and they've used that to really become a great investment for their investors. And again, I'll mention I love this stock. I own a bunch of it. It's been one of the biggest returners for me. So it'll be interesting to see how C compares to what we're looking at with Grab. And initially, it seems like Grab is kind of expensive. But again, all of these companies have a lot of opportunities to grow. So we'll see where they're going in the future. Obviously, 2020 was a weird year. People probably weren't using ride-hailing apps quite as often as they were in 2019 or will in 2021 potentially. But a lot of these other businesses, like food delivery, delivery for e-commerce, etc., probably did pretty well for them to offset some of those investments. I'm assuming they're not profitable yet. At 1.6 billion in revenue, it's hard to be profitable with this type of business, but we'll see. Again, they're talking about Southeast Asia. I think Southeast Asia is a great investment area. That's why I have a bunch of money in SE. That's why I'm looking forward to some of these other IPOs, whether it's Gojek, whether it's Tokopedia, whether it's Traveloka, to see what sort of valuation we're getting for some of these companies, because they are an underrepresented market in the online space. You can kind of see that here, that, hey, the demand for mobility or food delivery or even digital services online has a lot of growth in relation to some of these other countries, whether it's China, whether it's the USA. It'll take some time to get there, and there's a lot of other companies competing for this growth, but I think there's a lot of opportunities here, and I think that's why some of these stocks are so richly valued. So they are the category leader in growth and profitability at scale across different market segments. You're talking about 203% annual growth for deliveries, 37% for mobility, 102%. This is between 2020 and 2022. So you've got actuals, estimates, actuals. So I'm assuming mobility between 2018 and 2020 sucked, which makes sense because, who the hell's moving around in 2020? And then financial services growing quite a bit, 102% annually. So you're going to be break even. They're targeting break even EBITDA by 2021. They're actually break even here in the fourth quarter of 2020, which is good to see. And then they have a long-term EBITDA target of 30%. So this is really solid for them. Financial services, I think, are a good growth opportunity for a lot of these companies, but I think a lot of them are going to take them on. Number one in mobility, number one in deliveries, number one in financial services. They have access to payments licenses in 6 core markets. So they're talking about Indonesia, Malaysia, Singapore, Thailand, Philippines, and Vietnam only. And they are basing it on 2020 ride-hailing and online food delivery GMV and digital wallet payment TPV, so not necessarily revenue. And then online food delivery category position in digital wallets. So they have essentially all of Southeast Asia covered, diversified across 8 countries with no single country contributing more than 35% of adjusted net revenue. So that means one of their countries probably has 34% of adjusted net revenue. Maybe Thailand, maybe Indonesia, who knows? Maybe Singapore, maybe Philippines, maybe Vietnam, a lot of bigger countries here. So what are they doing? They've got Grab, they've got a synergistic ecosystem designed for more consumers, more merchant partners, more partner drivers, to drive more spending, more orders, more deliveries. Their cohort essentially means that, hey, as the years pass on, as we get more of these services introduced to our consumers, the amount of money we're making per user is growing. Even in 2019 going into 2020, it kind of grew at the same pace as it did in 2019. Essentially, this speaks to the app being a home base for certain users who will use it for more and more services, right? If you're using it as a ride-hailing app, potentially you will also use it to order food. Potentially you will also sign up for some financial services. And that's where they start making more and more margin. The overall net margin EBITDA here is 11% on mobility. Their long-term target on financial services, which they're probably investing in heavily now, so that's probably not profitable, is 30%. So if they can get people in through this stuff and then eventually convert them to a higher margin product, whether it's financial services, whether they add e-commerce in the future, whether they add hotel booking in the future, they have almost $5 billion in cash, not only to grow their current platforms, but to expand in other platforms. And you can kind of see in here, this shows me that, hey, they're not a company that's just standing by the wayside and making money off of what they think is working. They're expanding into other areas and trying to make more money via other services that they can expand their margins on. And that's really what you want to see as an investor. And that's probably why AGC was so eager to invest in this. So they've got a growing top line. Really, we're concerned about revenue. So you got 2.3 billion in 2021. Expected growth here is in the 42% range, which is pretty good. If I look at C, I think they grew their revenue at about 100% in the last year, sitting about 5 billion in revenue, something like that. Let's go to this Seeking Alpha financials and see if there's any projections there. I kind of want to have a comparison of what C is valued at. So you've got, almost 5 billion here in 2020 revenues. So let's go with C. 2020, 0.53 billion. Their 2021 growth, I think, is going to be quite nice. Based on what I saw in the last quarter, they're basically growing at a clip of 100% or so. I don't know why this isn't loading, but that's a bummer. Let us go to Morningstar and let us go to SE. Okay, there we go. So this loaded, don't need that. You're talking about projected revenue of 7.86 billion in 2021. That's a pretty solid growth rate. 43%, 82% on a higher base. I mean, SC Limited is just hitting it on all cylinders. You've got a price over sales. So what is their market cap? 127 billion as of today. They have 2.15 billion in debt, about 1.3 billion in cash. Not a ton, but enough. So let's just do some valuations. Market cap over sales. So price over sales, EV over sales for 2020. 25x, 21x. I think you're going to find, relatively okay valuations. Then for 2021, valuation wise, so valuations are kind of in line with C Limited. The question is, what do you think is a better company? And I think C Limited is probably a better company based on what I see here, but I also know a lot more about C Limited. It's a more diversified business, and it's got that video game business model that's just a pure cash cow. And that's what I like about it, that they can consistently generate a ton of cash flow from that business and invest it into other areas. And they've also started to expand beyond the Southeast Asia space, moving into Brazil with their e-commerce product and growing strongly there. So it's becoming a more multinational corporation beyond the Southeast Asia space. But again, valuation-wise, if you look at C Limited, if you look at the potential that they have and the potential that Grab has, the valuation's somewhat in line. You can look at some of these other companies that are in the ride-hailing space that are potentially worldwide as well. You've got Uber, which is kind of in that 9 to 10 space, depending on what you look at. I think Uber is more comparable than Lyft, but let's look at Lyft. Lyft is kind of in the, I think, where are they, in the 7 to 8 space usually. So that's kind of what you're looking at if you're purely looking at ride-hailing services. I mean, Uber obviously has Uber Eats, and I don't know if they've expanded anywhere else, but they're priced at about 10x sales. For Grab, you're paying about 24x sales. Now, you're buying higher growth. When you're buying SC, you're buying the idea that their growth is going to be 80% off of a $4+ billion revenue base, right? And if you look at 2022 projections, you're looking at 10.9 billion. And again, you're getting into the space of this is murky because projections that far out aren't that believable. But over here for 2022, you're looking at three projected revenue, right? So if we sort of do the same thing here, market cap over this, EV over this, forward basis, you're still sort of in line, right? The growth starts to pick up here. The growth starts to trail off here, but the starting point's a lot higher. But valuation, at least against C Limited, isn't ridiculous. They're sort of pegging it to this company and saying, hey, we believe we have a similar company with similar opportunities. I think the growth base is sort of similar. You're talking about 90, 100% growth initially, then you're trailing off into the 40% range. But again, C had a growth rate that was much faster initially, and it's still getting almost 80% growth off of a 4 billion base in 2021. And I believe that number simply because they've already proven that they can do it in the last quarter. And if they can kind of extend that into 2021, it's all pretty believable. So price-wise, is it a bit expensive? I think so. If you look at 2021 projections, it's kind of realistic and comparable. They're in line, but I think C has a bit more opportunity to expand right now, and I think their business model is a bit better. But it's not a crazy valuation, right? If you believe C Limited is a fairly valued business in the Southeast Asia space based on their current valuation, then this isn't outrageous for what you're getting, right? You're getting an opportunity to participate in a growing, expanding market in a different business model, right? And in a business model that's constantly evolving and changing because the company isn't just sitting on their laurels. They're expanding into other areas that are potentially more profitable. You can kind of see some of that in their contribution profit starting to become above zero in 2020, and eventually their EBITDA is going to be profitable in 2023. Kind of if you take this as a proxy for cash flow, they're maybe going to be down 1.8 billion in EBITDA, so obviously going to be funded by this cash infusion, and then they have a lot of money to sort of expand into other areas. I think they're probably going to stay in Southeast Asia, but what else can they do? Can they move into e-commerce? Can they move into other areas in a big way? Because there's certainly opportunities there. How is GoTech and how is Gojek rather and Tokopedia going to be valued in relation to this? If those two businesses the discussions were valuing them in the 35 to 40 billion range, is their revenue in the same space or is it higher? I would peg that it's higher. So maybe those discussions will trend that valuation up now because, if their revenue is higher and these guys are getting a 24p over S, price over sales valuation from a Spac, are they going to be valued closer to 50 to 60 million? Again, I don't know their valuation. The other thing to think about is, this presentation isn't as detailed as I would like it to be for a $40 billion deal. And maybe we'll get more information here. But again, some of the data around the deal itself wasn't as clear as some of the other presentations are. They're talking about improving profitability. Deliveries are growing. Again, they're kind of breaking this out by what's growing the most. You can kind of see, hey, mobility crashed in 2020 for obvious reasons, but that was more than offset by deliveries. The question is that going to continue? I think they're kind of assuming that it continues at a pretty rapid growth clip past 2023, but as the world gets back to normal, will this kind of trend down a bit and return to a more reasonable growth rate, and will this trend back up again? That's a question mark. Financial services, they don't really have. They have a pretty good total view over here of how many billion, but again, this is going to be a small revenue addition to their business, but it's a higher margin product, and as this grows, this will become very helpful in taking them to EBITDA profitability, because your EBITDA isn't always going to be in this probably 10 to 15% range for some of these areas, but you can really get to 30% plus here on financial services, which is really where you're going to be getting a lot of opportunity in terms of growth when it comes to cash flow. Again, key investment highlights. It's an under-penetrated opportunity. There's good leadership in their category. They have a good super app system. They have to grow that, I think. There's a hyper-local approach, probably no expansion plans beyond Southeast Asia, which is not something you want to see anyway. They probably want to take more space in this area before they move elsewhere. And you've got good technology, proprietary technology, and world-class management and shareholders. That's it. That's sort of all you get from the presentation. Which is sort of disappointing with how big of a deal this is. I would expect more detail as to how the deal is structured, where they plan to invest on a go-forward basis, some information like that, but you don't really get that, which is a bit disappointing. Another thing that they don't mention, and another thing to keep in mind as an investor is that Uber was once in Southeast Asia, and in 2018, and another good mention here, when Grab was valued at over $6 billion in 2018, that means it's 5x, 6x, almost 7x in 2 years. They essentially bought out Uber's ride-sharing business for a 27.5% stake in the company, with the CEO of Uber at the time joining Grab's board. I don't know if he's on there anymore, probably not, based on what happened. But you're talking about some ownership that is diluted due to Uber's stake. I don't know what their stake comes down to being now with some of this additional dilution with warrants, what have you. But Uber owns a good chunk of this company still, I'm assuming, unless this sold. I wouldn't think they'd be out of there. And again, this was kind of done to put pressure on Gojek, which was the market leader in Indonesia, and at that time had not expanded across Southeast Asia. So I don't know if that's happened since then. I haven't really paid attention to Gojek much since it's not a publicly traded company, but that's another thing to keep in mind. Uber does have an ownership interest here, and that's not mentioned here at all, which is interesting. I don't know if Uber sold that ownership interest. Let's Grab. Doesn't seem like anything happened there, but this is an interesting part of the investment that one should keep in mind. It probably doesn't impact you very much, but hey. And another thing to remember, when I was doing these calculations are at $10, right? So the stock currently trades at $14. So if you're buying this at $14, you're buying this at a pretty excessive valuation. So why I don't think this is a crazy valuation at $10, you have to keep in mind that the stock currently trades at $14. It used to be at $15, but obviously the pre-market is kind of realizing that, hey, maybe this valuation is a bit excessive. At $14, you've got a market cap of $55 billion, you've got an enterprise value of $50 billion, and now suddenly your price over sales is 35, your EV over sales is 31. So that's higher than SE is currently. Why not just buy SE if you want to invest in Southeast Asia? And then if you look at the go forward growth, it certainly is overpriced by a factor of about 40%, really, which is essentially, hey, bring it back to $10 and you've got yourself a deal. Similar on a go-forward basis. So really, I think at $10, this is a fair value. I think this is an interesting investment. If this was at $10 today, I'd probably jump in. I do not own shares of AGC. But at $15, at $14, it seems expensive in relation to some of these other investment opportunities in this space. But it is one of the few investments you can make in that area. And if you want to invest in Southeast Asia, Grab gives you an opportunity to do that. And I think that's something to consider. Personally, I would invest in SE if I want that investment. I would probably wait to see what happens with Traveloka, BTWN, which is a SPAC I do own. I want to kind of see the valuation there and what their growth opportunities are. And that is another Southeast Asia play, one that probably benefits from reopening and travel picking back up again. It's kind of like a booking.com, travelocity.com type play in Southeast Asia. Then you've got the Gojek Tokopedia merger. It'll be interesting to see whether that takes the IPO route, whether the merger actually happens, what the valuation looks like. If there's an opportunity for a SPAC to still get in there and give the two companies a pretty hefty valuation based on what happened with Grab. I think Grab is an interesting play. I wish there was more information about what they plan to do, what the Uber slice means for ownership, for actual public SPAC ownership in this presentation. I wish there was kind of more details about what they plan to do as far as growth capital goes, whether it's just investments in current businesses, whether it's expanding into other businesses. But you don't really get that from this presentation, so you're sort of going blind. I think this is a company that's a good company, but I think the valuation, at least at $14, is a bit expensive. You know, if you're buying Uber for 9x, if you're buying Lyft for a 7x, if you're buying C Limited for 29x, do you want to buy this for 34x? Maybe. You know, you obviously can't predict the future, but their presentation kind of leads you to believe that their growth opportunity is lower than another publicly traded vehicle, C Limited. So why not invest more in C Limited? If this were to drop closer to NAV, I'd probably pick some shares up. But at $14, it's not for me. But let me know what you think. Let me know what you guys think about Grab. I think it's a very good company. In terms of what they do, in terms of their leadership, in terms of their ability to expand beyond their initial product offering and expand into various countries in the area. So there's certainly opportunity here. Their revenue is going to continue to grow. But at this valuation, what's the upside, right? You're already at $55 billion. You can certainly double this valuation if some of these revenue projections turn out to be rather pessimistic, because if they use some of this $4 billion plus in capital to expand into other areas and grow that revenue at a better clip, if some of that financial services growth becomes more pronounced in the next couple of years and they can grow those margins, become EBITDA profitable, start investing into other areas at that point, this is certainly a business that I can see in the 200 to 300 billion market cap area in a decade or so, right? So there's certainly potential for good returns here. It's just, do other investments in this space make more sense? And for me, since I'm already invested in a company like C Limited in a rather big way, and it kind of looks more appealing at today's price, I'll probably stay away from AGC, from Grab. But that doesn't mean I won't invest in it in the future. If I see something enticing, if there's a price opportunity beyond what I see today, at $14, this seems like an optimistic reaction to this merger. But that's not to say this thing can't run higher. You can look at some IPOs that recently went public, like Snow, that are priced at 100x in terms of their price over sales. Now, sure, those are running at a growth rate of 100% quarter over quarter, but that still doesn't excuse the fact that the pricing metrics in this market are getting crazy. And when you have an interesting market like Southeast Asia, some of these valuations could really go higher than they are today. If they announce some new information, if they say that, hey, our projections are pessimistic once the merger happens, if these growth rates turn out to be better than we're seeing, I could see this spiking up. But right now at $14, I don't know. There's certainly going to be hype around this being a huge SPAC, being a huge opportunity in Southeast Asia. It can certainly run up beyond $14. But with the current state of SPACs and the ability to buy a lot of other businesses closer to NAV at better valuations, or even pre-DA businesses at NAV or below NAV, I'd probably put my money there rather than invest in here, with the hope of a long-term return, because I like other companies better, and I like companies like C Limited. Even though it's not a comparable business, I think it's a better business personally. I like the video game e-commerce space more then I like the ride hailing space. I'm not an Uber investor. I'm not a Lyft investor. I just don't see it as an amazing business model. It's one of those business models that are like, let's wait this out until we can get automated cars and then make a shitload of money. And at that point, why wouldn't a company like C Limited enter the space? If the margins are huge because of that, other companies are going to keep rolling in. So I don't love it as a long-term business model, simply because of that, because the competitors are going to flood in once the business model is well established. Sure, there's economies of scale that are already there for companies like Grab, and there's an app that people are tied to, but people are tied to other apps as well, and you can easily add something else to that. So the super app idea is a good one. Will it stand the test of time? I don't know. But at this valuation, I'm honestly not willing to take the risk because the valuations are a bit steep, and I am not a buyer of this stock unless it drops into the NAV range, essentially. If it's in the $10 range in a couple of months, I'll probably nibble a bit. But until that happens, I'll stay away, even if it means missing out on a potential growth opportunity. The current valuation is a bit high, and the upside just doesn't seem that huge to me. If it doubles to be $100 billion market cap company, is that realistic? I don't think so. Because there's already companies like C Limited in that space that are doing better than this company and are valued more fairly. Still valued high, 29x isn't anything cheap by any means, but the opportunity in this area makes me want to invest in it in a way, and I think C is a good investment in that space. And we'll see if any of these other investments that are going public in the near term, whether it's Traveloka, Tokopedia, Gojek, become valued in a range that I find enticing, because Grab isn't there yet. It might be in the future, but it's not. So let me know what you guys think. Leave a like, leave a subscribe if you enjoyed this video. Give it a thumbs up, etc. If you want me to review any specific investor presentations, just let me know and I'll take a look. Otherwise, have a good rest of your day. Enjoy your Tuesday, and I'll see you soon in another video.